let's dive into why one-to-one risk-reward ratio is literally all that you need. I'm going to break it down as to why it helps you pass prop firm challenges and the outcome of it, how it helps you grow your personal account, and then the math behind that as well, right? Let's dive in. So first and foremost, the outcome of doing it on a prop firm challenge, it looks like this. I'm sure you already know this, that prop firm challenges, they only give you certain leverage. So if you have a $100,000 account, let's say your max daily drawdown's 3%, that means you only really have 3K to leverage, right? Which isn't really much at the end of the day if you're risking, the amount that you should be risking, right? Now, if you're doing one-to-one risk to reward ratio and you're risking, 2% or 1% right off the bat, then you're already putting your account at pretty of a big risk, right? In my other videos, I explained about risking, 0.5%. But if you're doing that 0.5% to one-to-one, well, then guess what? You're going to make a total of $500 per win. Now, if you do that 3 times, right, that's going to equal you $1,500 in your challenge, right? And once you do that, you can then now leverage 1%. And if you're still leveraging 1% at one-to-one, that means you are now going to yield $1,000. It's just basic math, right? And now for every trade you win $1,000. So that allows you to stay within that parameter of not blowing your max daily drawdown limit and overall blowing your funded account or prop firm challenge, right? So that way you can have what? More control, right? One-to-one allows you to have more control. Now, here's something else, right? That a lot of people don't do, that they do not teach is closing half of your position and moving stops to break even stop loss, and letting the rest run, right? That is why one-to-one is all you really need. Because if you are, growing your account with 0.5% on your prop firm challenge, that's equaling you to $500, right? So you're already used to winning $500, right? You're already used to winning that. But once your account gets to, 1,500, now you have some leverage. Now you can increase it to 1% and still look for those one-to-ones. But now what you're going to do is a little bit different, right? Now that you're risking 1% and that one-to-one comes, right? One-to-one R to R, which is risk to reward ratio, you can then now take half of that 1%, which is a yield of $500, and then let the rest run. And you can let it run as far as you want it to go, right? And then that's how you're going to pass your prop from a lot faster and more safely, right? Because at the end of the day, you spent what, $500 to get that challenge. You want that money back. That's the whole point of getting a prop firm challenge, is to focus on getting that first payout to make your money back, right? And then get that payout and then go do it all over again, right? So if you can do one-to-one on a prop firm challenge and you're doing 1% after you've passed, that threshold of, 1.5 thousand on the account, now you can take half at one-to-one, which would be leaving you a 0.5% running, which could ultimately yield you another $1,000 if you're letting it run correctly, right? Because at one-to-one, you made $500, right? Now, let's say you let this trade run. You risked 1 full percent, right? And at one-to-one, you closed, right? But now, so that means you have another 5% running. If this happens to turn into a, let's say, 1-2-3, right? Because let's say the original play was a 1-4, and now this turns into a 1-3. Well, guess what? You just made 1.5K. Now your account's grown like tremendously, all because you follow the one-to-one philosophy. You took half a percentage or you closed full at one-to-one, either one of those, right? If you took half percentage, guess what? Now you have the rest running to then grow your account. And let's say that price comes and hits your break-even stop loss, you're still up $500 because you're following that one-to-one philosophy, right? And that one-to-one philosophy allows you to outsmart the rules of a prop firm challenge, right? Because they have so many rules. They have They have also a rule called a consistency rule. I'm just going to do con, right? That means it's a percentage of your total wins. So if you have one win that equals, like, let's say 5K, let's say you hit a home run, right? Just freaking smacks out of the park. You now have to have all your other trades be at 5K, or a certain percentage of your wins has to sum up to 5K, right? So that's what a consistency rule is. And a lot of prop firm challengers are doing that. So if you focus on these one-to-one risk to reward ratios, well, guess what? Your consistency percentage is going to be spot on, and then you're going to get paid out, right? I literally did this on a prop firm challenge. Focused on one-to-ones, focused on risking 0.5% to make $500. And guess what? In 1 week, I grew this to 4 grand because I followed the process, right? I risked, 0.5%, focused on the one-to-one, right? I would close at the one-to-one. Then I got to 1.5K on my funded. And then I risked 1%, and then I took half profit at the one-to-one point, and I let the rest run to make me more percentage gain. And that's how I literally got to 4% in 1 week, because I'm just following that exact process, right? Which was $4,000. And this allows you to get paid out on time because you're following the consistency rule, meaning not one trade equals the majority of your money. It's all of your trades that equal basically the same amount of money that you made, right? Which keeps your consistency rule percentage at bay, and it allows you to get paid out, right? So one-to-one is very crucial on doing it correctly with your prop firm challenges, right? Because if you're doing it on your prop firm challenge correctly, you can start getting paid out every single week, or every single bi-weekly, or depending on the rules that you have, once a month, right? Whatever that prop firm challenge rules you have, right? So this is going to allow you to get bigger payouts, because here's the thing. Let's say that you get your first payout, you're doing great, fantastic, right? You have a 100K account, right? And then you do this, one-to-one philosophy here, right? And you're making a consistent $500 all the time, right? Let's say you do that 3 times in the week. That's 1.5 thousand, right? 1,500. And then let's say you do that 4 times, right? So I have to do the math real quick. Bear with me. So we're going to do 1,500 times 4. Oh, no, times 4. That's 6 grand that you just made, right? That's 6K. Now you have six, and you can put that into your personal account, right? I'm just going to do PR. And then you do it again the next month, another 6K. So now you have 12K in your personal account, right? And let's say you do that one more time. Now you're going to be at 18. That's not an 8. I gotta make a better 8 than that. Now you have 18K, right? And if you're following this one-to-one rule at 5.5%, right, you're making some good money at that point. And now you don't have to rely on prop firms. Now you can fully live off of trading at this point if you're doing it correctly, right? Which brings me to the next segment, which is your personal account, right? Let's break this down. If you, now with your personal account, you don't have this drawdown limit, right? You don't have this drawdown limit. So you have a little bit more flexibility in what you can do for risk management, right? So I always teach people risk 2% of your account, right? So if you're doing 2% of, we just did, 18,000, right? So if you do 18,000 times 2%, that's $360 that you're looking to risk, right? And that means that's what you could potentially make per trade if you're risking 2%, right? So it's one-to-one, right? Again, if you do this consistently, and then let's say you start increasing, you're not going to increase your lot size. That's not what you're going to do. What you're going to do is close half and then let the rest run, right? So that way that 360 can turn into more money, right? But that's a conversation for a later day. Now, let's say you win 2 days in a row. Now you're looking at a potential 4 to 5% growth, right? Which could be 360 times 2, which is about $720, right? On your personal account that you just did. And then if you times that by 4, that equals a total of 20%, which equals about 2,880, right? $2,880 that you made on your account, right? That's on an 18K account. Now your account's at 20K, right? Now your account's at 20K because you followed that rule. So in 1 month, you went from 18. I gotta do that all over again. I'm so bad with my eights. Let me do that again. Uh, 18, right? K now turned into 20K, right? Because of the compound effect, right? Because you follow the 20% return per month. Now, if you do that 4 to 5 months in a row, guess what your 18K turns into? Your 18K turns into $36,000, right? Because you followed this rule and you did slow and steady growth. Now, 36,000 times 20% is 7,200. Now you're literally making someone's yearly salary by clicking a button and potentially trading for, like 5 minutes, because one-to-ones can happen in 5 minutes. Imagine that every morning, waking up, trading for 5 minutes, clicking a button saying, yep, made my money, made 7 grand this month, all just logging on and doing it. Very simple, very easy to understand, right? And if you continue this process year over year over year over year over year, you're going to make a lot of money, right? That's what you're going to make. Now, the reality of this and why it works is because it's slow and steady and predictable, right? If you have so many traders that just do this, you already know what I'm writing. Gambling, right? They go to the casino and they think they're going to make what? They think they're going to make money. But in reality, they end up saying,
Uh-oh.
after they lose all their money, right? So this is what you really need to focus on is doing this every single month, doing one-to-one and making your percentage. Like there's so many traders and it really bugs and annoys the hell out of me. There's so many traders that post these content of I'm gonna put 3K in my account and I'm gonna turn it into 100K in the next 30 days. Do you know how much they're risking on this to make that? They're risking almost 50% of their account in one trade, right? Don't watch those people. Those are the type of people that are going to have you blow your account consistently. That's not trading, that's gambling. 1-to-1 risk to reward ratio is slow, steady, and predictable, right? You don't want fast money because fast money comes with fast problems. You want slow and steady, predictable growth. Because let me ask you, what is the normal percentage that somebody makes in a year? If you don't know this, then I don't know why you're watching this channel, but you should. That percentage somebody that makes per year is normally 10%. If you risk 2% per trade and you focus on one-to-ones, you can make someone's yearly percentage in 2 weeks by doing it correctly, right? Just slow and steady, right? Because here's the reality what the compound effects can do. The compound effects can take your 5K and turn it into half a mil into 2 years just by focusing on this concept and this strategy, right? It's pretty self-explanatory, pretty straightforward. And if you don't believe me, well, let's look at the math behind it, right? Well, first off, before I do the math, I want to talk about why it works. Like I just kept mentioning, slow and steady. It's calculated, it's not gambling, it's a solid plan, and it's hard to make money in the markets anyway. So why combine? So like why risk it? Combine a concept that actually works, a strategy, a proven strategy, and combine this one-on-one, not one-on-one, one to risk to reward ratio, you're going to make a shit ton of money, right? And that's how that works. And you have a nice winning streak. But there's probably people in the comments going to say, like, well, what happens if you lose? Blah, 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 blah. Well, that's why you practice proper risk management. You risk 2%. What are you going to lose? 2%. And then you just call it a day. right? So let's say you trade 4 days out of the week, right? And then let's say you win 3 of those days. That's 6%, right? You're done for the week. But then let's say on the other week, right? You trade 4 days in a row, right? But let's say you win one day, right? And you lost three. So that means you won 2%. Technically speaking, you lost 6%. So you're down 4% for the week, but ultimately because you won here 6%, you are positive 2%, right? That's how the math works. So once you make your 5% or more, just be done for the week. Like, don't risk anymore, right? Now, if you happen to be down 5%, that's okay still, because you're in this for the what? Long term, LGT, long term, right? Long term. You're in this for the long term. You're not in it to make money today, tomorrow, and become a millionaire the next day. No, you're in this for this span of time. You start here and you want to end up here as a millionaire, making all these M's. There's benchmarks in between that you have to hit, right? And each one is a different phase that you have to pass. So enjoy this process while it lasts, right? Don't just try to jump from here to there and then in one trade, in one shot. It's not going to happen, right? It's not going to happen. And this is why the math works on this, right? The math works on it quite simply. One-on-one math, right? One-to-one math. The account balance is $5,000, right? You risk 2.5%, let's say, per trade. Trade 4 days out of the week. Yeah, if you have 2 winning days, that's 5% growth. Do that 4 times in the month. That's 20% returns. And then in 1 year, you'll turn that 5K into 45,000. And then the next year, if you do that again, 45,000 will turn into 400 grand, I believe the math is around there. Let me ask you this. If it were to take you if it took you, where's the pen? If it took you 2 years, right, to be at a 400K count balance, and let's say a worst case scenario, right? Let's say worst case scenario, let's say you're 40 years old, right? All you have to do is wait 2 years. So you'll be 42 years old and having a 400K account, right? And what's 400K of 20% of that? That's 80 fucking $1,000 per month if you're just doing this one-to-one risk to reward ratio. So you're going to sit here and tell me if you're 40 years old, you're not going to wait 2 years to grow this account to make 80 grand a month and retire and never work a job a day in your life? I call bullshit on that if you're not willing to do that, right? It's just 2 years of focused and steady grind to make a shit ton of money. That's what it comes down to, right? But many people just don't want to do it because they're lazy, they don't believe in the system, they think it's too slow and boring, they want something super exciting. No, I always say to people, if you are having an emotional roller coaster while trading, right? If you're feeling all these emotions, then you're doing something wrong, right? That's not how trading should be. Trading should look like this. Plain and simple. Pretty boring. Because what are you doing? You're literally watching market go up, and then go all the way down, 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 and then up, up, and then down, 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 and then up, up, up. You're literally watching paint dry. Like literally. You're watching candles go up and down. That's not fun. That's freaking boring. There's a lot more fun. If I know fun is not a word, but there's a lot more fun ways of making money, right? Trading is super boring. It's like it all it is you follow a strategy, right? If you're in consolidation, support, resistance, wait for that push up or that push down, take a sell or take a buy, and then you then do one-to-one, right? And then you make your 5% for the week and then you call it a day. And you do that every single day for the rest of your life. Yes, that is pretty damn boring, but it's consistent. It's steady, it's predictable, and people don't like consistent, steady, and predictable. I know that sounds crazy to say, but believe me, I have thousands of calls with people, and they always want the most fast and furious and flashy systems. It's like, no, with me, it's boring. It's a boring, slow, steady process, and you have to withstand the test of time to do it, right? So that's how that all works. And that's why, essentially speaking, 1-to-1 risk to reward ratio is the way to go. And it's literally all that you need. If you liked what you saw in this video, drop me a follow, subscribe, like, comment below some of the things that you took away or some other things that you want me to touch up on. Or if you disagree with me, comment below why you disagree, and I'm willing to have that conversation with you. Cool. Awesome. Well, see you in the next video. Peace.